Good afternoon, everybody. I'm Dan Hussey with Zaner Ag Hedge, bringing you a strategy of the day update here for August 28th, 2022. Wanted to jump in here, go over corn and beans respectively before getting into the Strategy of the Week webinar, which is normally held every Thursday at 2 p.m. Central. This week, I have to push it back to later this evening, so I wanted to put this video out there to at least cover what we're doing in today's price action and what to expect in tonight's report. But this market, obviously having pushed up off of lows from last week, might be a little top heavy and rolling over here with some confirmations today that we'll talk about. Remember, trading futures involves risk and is not suitable for all investors, and everything I talk about here today is just my own opinion and not a direct trade recommendation. We're going to begin the day off with December corn, new crop corn here, showing you a daily chart. The big supportive area that was resistance into the end of last year here, this brown box, this orange box, we've come back down to test that area of support. There's also this yellow kind of trend line that if you step back far enough, you can see had traded against the lows here all through last year. We came back down to test that area, in the market as well. The 200-day moving average at 630 was the level that we've been fighting over, that purple line here on the chart, over the last several weeks. The 18-day moving average is below us at 622. That'll get dragged up pretty quickly and probably cross over that 100-day, and then that 200-day here with the 55-day moving average, this green line here at 635. So we've broken back above the 55 and 200-day moving averages. The 100-day moving average up around 676, still kind of being resistance up there. Or acting like resistance, but this trend we've had off of lows is rather choppy. It's rather overlapping. In other words, every push to new highs overlaps in their pullback. There's no real sustained strong trend to speak of, and that's why I'm a little concerned that this might be some kind of correction here mid-season before one more push lower that we've been talking about, into September, October. We find some kind of harvest time frame low before basing for the crop year to, going forward into the first and second quarter of next year, where if there's anything similar to that on these charts, that's precisely what the contracts did last year. Just using the early price action on this December contract, we rallied to start 2021. We went sideways there into October. We found a high there in the early summer, and then we rallied up into the new high in the following summer. Now we're going sideways here into October, November, and then hopefully a push higher from there. On the 4-hour chart for December corn, we've now traded up since we last gathered here to fill the gap at that 639 area. We had a small gap. Now we've left one open on the charts down here at 628, where we gapped up in 2 days ago's price action into the open. All other gaps, with the exception of 584 down below us, and then now above us here at 673 and 730. Those are all of our open gaps. So 2 open gaps below us, 2 open gaps still above. In this 4-hour chart, having broken kind of out of trendline resistance here, just remove that from the chart. We broke through that area, came back, tested as support. Upward sloping trend lines against the lows here, held as support as well. Got a little bit of a channel going on here, going higher for December corn. Into today's price action, we had a bit of a trend line holding. It has failed, held even as resistance there as the market is rolling over here a bit. Any lower here on the day into the close, would make for a reversal, lower lows and lower highs after a period of higher highs and higher lows. A pullback can't be ruled out in this market, even if we're very bullish, right? A pullback down to 637, maybe even as low as 629 to fill that gap, couldn't be ruled out before bouncing and heading higher either. The last in the series, or the last 50% levels that we kind of held here, and either of these pullbacks had upside targets here around 654 to 662 filled. So it's really a question if this market wants to really pull back at this point. There are 3 fib levels that I'm intrigued by: 637, 630, and 616. So all backed by other levels here in a pullback. We saw those moving averages on the chart before, as well as upward sloping trend lines against the lows, and of course these fibs coming off of highs. from lows to highs, I should say. Now, we did trade up into the full 50% retracement from the 766 contract highs down to the 561 lows. At full 50% retracement here, holding at 660. So, yeah, formidable resistance on the way up. Anyone over the last 2 months that, regrets not selling above 660 to $7, well, this was an opportunity to try to do some of that. And certainly after yesterday's reversal, I began really advocating, particularly from a hedging perspective, buying puts, selling calls above, getting a window strategy going so that we can potentially find a way to own a $6.20 or $6 put in this environment for new crop. And sell something, up there around 720 to 740. Not saying we can't go above those levels, but there's a lot of time between now and then to figure out re-owning the upside if we want. Otherwise, it's a great strategy to be able to say, okay, now I've got a floor in case we do roll over and go below $6, because you can't really discount that when we take a look at that larger daily time frame. If we go back down, below $6, what's stopping us from retesting 550? And below there, we could break down, towards 450 to $4. There's no reason we couldn't. Look at what the chart of wheat did and how much it erased. Now, granted, we like seeing the bounce where we're seeing it, but failing to break out and really head higher without any major news cycle or event just means that we've probably got a wall of corn heading down the pipeline, right, for it, to hit the markets in December. Yes, we definitely think crop tour is showing that maybe it was a little worse than we were expecting. We definitely saw some of, I think, the worst acres in crop tour in that first few legs. Those are our problem areas, so don't want to get too biased on what the national average is based off of that. But I do think that we are at least in the type of environment where we have, shrunk acres a little bit in a late plant year. Those good acres and good areas of the country that got in early are going to perform well. But is it enough to carry through the problem spots or some of those other acreage? We've yet to see. And I think the narrative and that story has run dry at this point, right? It's not enough fuel to rally a bull market and get one going without massive exports and other reasons. Now, that doesn't mean we couldn't see those things happen. Turn a tide into September and October, we could definitely see that type of export market pick back up. We didn't see terrible weekly numbers here today, but I do think that narrative will spin back up in a real way once South America is truly off the table here in a couple months. Okay, let's move on to soybeans because I do want to keep an open mind that we will be having another video here later today. November beans trading down 23.25 cents relative to the September trading down 4 cents. I do think that we're seeing a better than expected bean crop probably throughout crop tour. Beans could afford getting in late. We've gotten ample rains, I know, in my part of the country during a time of the year when rain makes grain, and we're getting enough heat units and sun alongside these sprinklings that rained pretty well today that keep pods filling out here. We came up into kind of triple resistance, quadruple if you want, up into this $14.50 to $15 mark. I do think that's a very important area on this chart to really kind of consider at this time as a cap on the market without some extremely bullish news or something else taking back over for the time being. And we are very much trapped in a range, right? We're below the 100-day moving average at 1460. We're above the 200-day at 1400. The 18-day and 55-day are right in the middle of that range, around 1417 and 1421 respectively, and we're pulling back down into those levels. There's not much else I want to talk about with beans other than it's a big range. We just traded the high end of the range. Yesterday was our first signal of maybe a turnover, and today is confirmation of one, in my opinion. That we'll be heading back down to test 1400 and maybe the low end of the range. I'm not saying that we couldn't go back to 16, but just the way we're trading is very range bound and seems very confluent with that type of price action. We got open gaps above at 1534 still, open gap below down around 1350. I can't discount us going all the way back down to fill that open gap with that failure to break out of these, this high from the end of the month of June, this high from July, and now the new August high at 1484. The whole rally back up broke the 61.8 line of that larger pullback. Then the initial pullback after that broke the 61.8 line of that initial rally. So that gave us a 61.8 line break, two concurrent ones, and that's when I started looking and drawing up these trendline triangle wedge-like structures that I'm trying to now find, and I'm looking for that wedge to form. And only because we had a signal to do so, which was that double 61.8 line break that I've been talking about for the last couple weeks. And look, the market came back up to test the high end of the range. It eventually failed. Today's our first reversal signal, lower lows, lower highs. We're taking out 2 days worth of lows. And again, 1400 is not that far below, nor are, upward sloping trend lines from our recent lows. A few levels here that I would watch. Not that I would be a buyer on with, an order, but these trend line levels are levels to watch for confluence alongside other reversal signals and other highs and lows in the market, or open gaps and all that good stuff. So with that being said, in the very near term here, there's not much going on but chop inside of a range. When we break down the 15-minute time frame for soybeans, yeah, there was a bit of a 50% pullback initially here somewhere that launched the market higher. There were certainly extended longs that were being aggressively defended and traded, and then all of a sudden the market failed, pulled into 50% shorts off the highs. And now we have a 50% short from 1485 down to the 1447 low, trading at 1467 down towards a 1438 target. Okay. Now we're going through that 1438 target from entry highs down to the new lows of today. There's a next in the series 50% short and resistance around 1450 we should be aware of. Let's watch. Let's see if this market becomes technical and stair steps lower. But we have a valid downtrend beginning. We're going to start talking about, a trend channel or some, trend line resistance and a, move lower. We had that channel heading higher. That channel broke, even held as resistance, and now it's reversed and starting to head lower. So market's rolling over. We'll see. We will be, covering this all in a little bit more detail, looking at more markets like crude oil, even the bonds, our cattle and hogs, and wheat as well, to take a look at where some other markets alongside corn and beans are at here into the end of this week and later today in the Strategy of the Week webinar. I'm shooting for probably around 4 p.m. Fortunately, I had a doctor's appointment that got scheduled later in the day here. Not going to be able to run the webinar at the same time, but we'll just do it a little bit later this evening. And of course, anyone who signs up for that Strategy of the Week webinar, you do get an email copy of the link to the video if you cannot attend the live webinar anyway. So with all that being said, everybody have a great day. Thank you for joining me here for another Strategy of the Day recap. As always, I can be reached over here at Zaner at 312-277-0110. Find me on Twitter or on Facebook, or shoot me an email, dhussey@zaner.com. Until later today in the Strategy of the Week webinar, and sign up links for all of that are in the comment section and information section of this video. But until then, have a great day, everybody, and we'll be back with you as price action develops. Take care, everyone.